Hey everyone, welcome back to the channel. Imagine waking up one day to find your state's economy in free fall. Jobs vanishing, homes foreclosed, and basic services grinding to a halt. Sounds like a nightmare, right? But with whispers of a looming recession, fueled by everything from trade tensions to skyrocketing debt, some U.S. states are teetering on the edge. Today we're diving into the 10 states that experts say could collapse first if the economy crashes. Stick around, because this isn't just doom and gloom. I'll break down why these states are vulnerable and what it means for you. If you're in one of these, or even if you're not, this could change how you plan for the future. Let's get into it. We're counting down from 1 to 10, starting with number 1. West Virginia. This state's economy has been hit hard by declining coal production and a shrinking workforce. With flat employment growth and heavy reliance on federal jobs, any budget cuts in Washington could devastate local communities. Add in weakening labor force participation and recent tax cuts that haven't sparked the expected growth, and West Virginia's revenue streams are drying up fast. In a recession, experts predict slower recovery here due to limited diversification. Think energy and manufacturing taking the biggest hit. Score from CNBC, 195 out of 445. Number 2. North Dakota. Oil is king here, but with prices fluctuating and production nearing break-even points, the economy contracted last year while the rest of the U.S. grew. North Dakota has a strong balance sheet from past booms, but low foreign investment and vulnerability to energy market crashes make it shaky. If global demand drops or tariffs mess with exports, unemployment could spike quickly. CNBC gives it a D+ grade with a score of 194. Number 3, Illinois. The land of Lincoln. Plagued by massive unfunded pension liabilities totaling $140 billion, even with some fiscal improvements, it has the worst credit rating in the nation. Heavy exposure to trade wars, especially in manufacturing and agriculture, could deepen budget deficits. Population decline isn't helping either, as fewer people mean less tax revenue. In a downturn, Illinois might struggle to fund essential services without major bailouts. Score, 188 out of 445. Number 4. Rhode Island. This small state packs a punch in vulnerabilities. 40% of its spending comes from federal funds, making it super exposed to DC cuts. Low rates of new business formations and foreign investment mean limited growth engines. Unemployment insurance coverage is spotty, and housing affordability is worsening. If a recession hits, Rhode Island's lack of economic diversity could lead to rapid job losses in healthcare and education sectors. CNBC score 180, D grade. National Business Capital ranks it low at 36.3 out of 100. Number 5, New Mexico. Federal funding accounts for 43% of state spending here, including a big chunk for military and research jobs. But new businesses have low survival rates, and the economy's tied to volatile sectors like oil and gas. With high poverty rates and dependence on tourism, a national slowdown could cripple it. Efforts to diversify haven't caught up yet. CNBC 177 points. Number 6. Kansas. Rural America at its core, Kansas is reeling from tight credit, falling crop prices, and land values. The farm economy is subdued, and higher tariffs could hammer agricultural exports. Unemployment is rising, and the state's reserves aren't as robust as needed for a prolonged downturn. This could mean widespread farm bankruptcies and rural depopulation. Score, 142 out of 445, F grade. Number 7, Colorado. Surprisingly, right? But Colorado tops lists for high household debt-to-income ratios at 1.1, the worst in the nation. Rising unemployment and a housing boom that's pricing people out are big red flags. The mountain region's growth has masked underlying issues like over-reliance on tech and tourism, which falter in recessions. National Business Capital scores it 31.6 out of 100. Number 8, Mississippi. Nearly half the budget comes from federal dollars, and a third of GDP from international trade. Vulnerable to tariffs. High unemployment, low per capita income, and poor past recession performance, big GDP drops in 2008 and 2020, make it fragile. Infrastructure and education funding could collapse first. CNBC 130 points, F National 31.8. Number 9, Louisiana. Half of state spending is federal funded, with heavy ties to oil, chemicals, and trade. Unemployment insurance covers fewer people, and debt levels are high. Past hurricanes have strained reserves, and any energy price crash would be devastating. Scores. National 30.8. CNBC 173. F and number 10, Alaska. The most vulnerable, hands down, tied to volatile oil prices that are down big time, plus a huge federal workforce at risk from budget slashes. Diversification attempts have flopped, and the economy's already weak. In a crash, expect massive job losses in energy and government. CNBC score 110 out of 445. F grade. Ooh, that's heavy stuff, but remember, this is based on current data. No one's saying total collapse is inevitable, but these states have weak spots that could crack under pressure. If you're in one, consider building an emergency fund, diversifying your skills, or even looking at relocation options. For everyone else, it's a reminder to stay informed on economic trends. What do you think? Did your state make the list? Drop a comment below, like if this was IP, and subscribe for more real talk breakdowns. Thanks for watching. Stay prepared out there.